Nilesh Shah, Managing Director and CEO of Kotak AMC, joins us now. Let's connect with him to understand that what is driving the market, and bulls are back. Are they here to stay? Nilesh bhai, I used to think that we are the only two bulls in the town. But when I look around, everybody suddenly is the India bull. Everybody is excited with what's happening in the mid-cap space, small-cap space and the SME space. Now, for the sake of turning bearish, do you think one should turn bearish or one should stay with the market?
I think if you're a long-term investor, you can stay bullish. If you are a trader, especially in micro caps, mini caps and small caps, this is time to be cautious.
Be cautious because whatever could go wrong has gone wrong, and whatever and the way the economy flows, the global macro setup, earnings are moving, everything is quite favorable. So why should one turn cautious or even bearish?
So market discounts all potential news and expected turn of events in the future. Undoubtedly, Nikunj bhai, as you mentioned, our growth story is looking good. But when small cap starts trading at a premium to large cap, when micro caps and mini caps starts trading at a premium to large cap, then there is a need to be little bit cautious. Many of the micro caps and mini caps are today trading at valuation which looks excessive. They are trading there because there is a limited floating stock. There is a herd mentality in buying what moves. And maybe distribution is already happening. There is no harm in being cautious when making money is so easy.
Let's look at the factors which are at play. One is flows, second is the earnings trajectory, and third is underlying valuations. How much role do you think flows will play for next couple of quarters or couple of months?
So Nikunj, by today we have Triveni Sangam of flows, sentiment and fundamentals. On the flow side, retail, HNI, domestic institutional investors and foreign portfolio investors all want to buy on correction for sure. And most are also buying at current level. On sentiment side, there is Birbal ki kahani happening in India. Our line was bigger, but other lines below us have become smaller. Russia scored a self-goal with Ukraine invasion. China is scoring a self-goal by their crackdown on entrepreneurs and property sector bubble. South Africa, Brazil, Turkey, Taiwan, they all have their own challenges. In the process, their story has become shorter. Our line looks bigger. And more importantly, there is fundamental also. This is not like 2000 when there was lack of fundamentals. Today, earnings are pacing with the market. There is reasonable expectation that this year and next year earnings could be in low double digits. So when you get this kind of Triveni Sangam, undoubtedly markets are likely to trade at a little premium to its historical average valuations. My feeling is that for markets to sustain from current level will require all the Triveni Sangam. Flows should be good, sentiment should remain positive, and fundamentals should match with the prices.
Let's talk about some of the buzzing spaces, and the one buzzing one off late has been China, right? With all the stimulus moves that the government is undertaking, the impact of that, I guess, is also being felt on what's happening within the chemical sector back home. Of course, that trigger aside, soda ash prices have risen. There is talk about prices of several basic chemicals rising amid the rising crude prices, as well as the China impact. Wanted to understand what could be the beneficiaries of the China stimulus?
So number one, we'll have to still figure out what kind of stimulus comes, in what sector, and in how much form. today what we are seeing is resetting of Chinese economy from investment-led to consumption-led. To some extent, there is problem of capacity, and to some extent, there is excess savings, which is restricting consumption. We believe global metal and commodities will remain subdued as Chinese demand, despite stimulus, will continue to remain soft. There is a real case of dumping by Chinese manufacturers as they won't find local appetite for their product. Sectors like chemical and metals will continue to face headwinds from Chinese dumping, and government action on imposing import duty or anti-dumping duty on Chinese product will be critical for some of these sectors. I think it is too early to take a call on what China will do. They have multiple challenges and they may deliver differential kind of steps. In chemical sector per se, we believe this is time for accumulation. You don't have to buy everything today. There will be 3 to 6 months window to accumulate in chemical sector.
Nilesh, hi, morning. Wanted to also understand how exactly you're looking at playing the compounding theme within the entire financial space.
In the financial space, this is party time. NPAs are low, margins are nearly all-time high level, profitability is all-time high level, credit growth is reasonable. Even on that base of credit growth, it doesn't look like that NPA pressure will build up. Liquidity has been decent, deposit growth has been good. Essentially, for the banking and financial services sector, this is probably one of the best times. However, if you notice, the banking stocks haven't delivered as much as the fundamentals warranted. There has been little bit of derating in the valuation of banking stock. We believe from here onwards, we'll have to pick up those banks where credit culture continues to remain robust. We have seen a couple of quarters of very, very low NPAs that should not result into complacency. We should also be focusing on those banks which are leveraging technology to reduce the cost of intermediation. With this kind of high margins, undoubtedly there will be pressure to lower the lending rates or lower the margin. And banks and financial services, which will be able to reduce the cost of intermediation through use of technology, they should be probably the winner over the next cycle.
There is a block deal in Spandana Sphoorty where Padmaja Reddy has sold over 30 lakh shares. Now, what is the significance of this? Well, Padmaja Reddy, when she was running Spandana Sphoorty, there was a change of the guard because of pressure by private equity investors. She has openly indicated or publicly indicated that she would be selling in the open market. And her stake sale has been the irritant for the minority shareholders because you know that there's a large supply which is coming. I don't know what would be the residual holding after this. I'll have to do the numbers. I think Ajay is going to come and perhaps share more details on this one. But from a market standpoint, in terms of near-term technicals, demand versus supply, I think this really would be important. Nilesh bhai, we've historically discussed two sectors where Kotak AMC has been bullish in the past. One was pharma and second was to a large extent cement. For pharma, the comeback has been somewhat unreal. From, it is a sector where it is more volatile than predicting commodity prices or even predicting Bitcoin prices now, right? COVID, the peak prices, there was a peak euphoria, then a shortage happened, then excesses happened. Now again, shortage has started. Folks who track pharma, they tell me there's a shortage of medicine in America. 6 months ago, they told me there are excess medicines in America. So predicting pharma is like predicting Bitcoin, which is impossible.
In a lighter vein, Nikunj bhai, they have excesses of those medicines which they don't require, like the opioids. And there is a shortage of those medicines like manufactured by India, which is what they have not been buying at right prices. Surprisingly, in America, the entire pharma distribution is controlled by 3 or 4 players. They extract heavy pound of flesh from the manufacturer, and which resulted into derating of pharma sector along with stocks coming down. Now, Indian manufacturers and other players globally are giving it back to the distributors. There is equilibrium coming between distributor and manufacturer in US generic space. And on top of it, they are realizing that they are short of life-saving medicines. Put together, we are seeing higher volume and better margin for pharma sector. And most importantly, valuations were very low with very, very low expectations. In the market, when expectations are low and delivery is better, under promise and over deliver, undoubtedly prices move. The same thing is happening in cement. There was a patch of subdued growth. Now volumes have picked up. Margins are stabilizing. While there is some amount of cost pressure, still the results should be good. With government executing infrastructure projects at a much faster pace ahead of election, we believe cement demand will remain robust, and with reasonable certainty on margin, that sector should outperform the market.
Nilesh, always a pleasure chatting with you. Thank you so much for taking the time out.
Thank you.